So to know that you came from a school teacher, eighth grade school teacher, all the way to managing billions of dollars in real estate is like unbelievable, right? But it shows it can be done.
It can be done.
Hello, and welcome to Mornings with Joel, commercial real estate podcast, where we focus on rising stars and established players in commercial real estate and talk to them about how they are building legacies in today's marketplace. All right, so Pam, good to catch up with you and catching up a little bit before we went live here. So, good to hear about that. We obviously have walked some of the same streets up there in Manhattan, so it's all good stuff. But I wanted to invite everyone here. You're listening to the Mornings with Joel CRE podcast. And some folks that said, wait a minute, it's not morning anymore, but the show used to be in the morning, but it's still morning for our friends on the West Coast. So that's why we left the name the same. So good stuff. So we have a special guest today. We have Pamela West with Nuveen. And really excited to talk to Pamela because she's been doing some big stuff right up there in New York City. And I think you guys will be excited to hear what she's been doing. And also, you may have some questions later on in the show, so feel free to ask her about those. So, Pam, how you doing today?
I am great, Joel. And, thank you for inviting me to the show. I actually started listening to it a bit. So I was busy over the last year, but I'm trying to catch up on a lot of your episodes. And I realized that you've had a lot of friends and family on your podcast. So I feel honored to be on the show today.
Oh, well, thank you. Thank you. Yeah, well, we got a lot of good friends and family that are doing some big things, right? So
Absolutely.
it all works out. So just for you guys that are listening in, if you're not familiar with Pam West, I'll tell you what, Pam, why don't you give us a little bit of background as to, where you work and what you do, and then we'll go into a little bit of your background as to, kind of how you got to where you are today.
Absolutely. I am Pamela West, Senior Portfolio Manager for Impact Investing at Nuveen. Nuveen is a TIAA owned company. So we handle all of the asset management on behalf of TIAA and their balance sheet, as well as raise third party capital in the market to invest in our different strategies across the platform. I sit in an impact investing seat that primarily focuses on investing in affordable housing and the preservation of affordable housing.
Okay. All right. Fantastic. And I understand that portfolio of capital on the balance sheet that you guys are investing are in the bees right now.
It is. It is. I think people don't know that TIAA, of course, is a mission driven company, and they manage. It was started on behalf of Andrew Carnegie, and so it's always been mission based. It's always been focused on managing money for teachers and professors so that they can retire in dignity. And so, with that mission aligned, they have always been an investor in social impact or responsible investing. That impact investing term was only coined about a decade ago. And so it's new to the industry, but they have really been in this part of their business for many decades now and investing in the affordable housing space since 1992. So, it's not new for them. And we've invested with some of the wonderful, like credible fund managers in the market, as well as done a number of our direct investing. But yeah, in 2017, in 2016, 2017, we did decide to do more direct investing. And so, Joel, that's where we started hitting the bees, as you say, and ended up in the billions. So we definitely have a large scale portfolio of affordable housing today that's just under about 7 billion
Okay.
in
All right.
AUM.
Well, I'm definitely going to dive into that a little bit more because, that's kind of probably why a lot of folks are going to be listening today is to find out a little bit more about that impact investing and whatnot. But you had a long history. You didn't wake up and just land in this position. I think you started off at CBRE, if I remember correctly. So how'd you really kind of get your get in the
Yeah.
industry?
I'll take you back even further than that. I come from a long line of teachers, and so,
Oh, really?
I
Okay.
started out teaching 8th
Okay.
grade language arts in
Wow.
North Carolina. Yeah, that's,
Okay.
I did that for a couple of years. All of my friends were headed to Atlanta, Joel, and,
Okay.
so I left North Carolina. I went to Atlanta, and as a teacher, you have to work year round, and so in between my next identified job, which I had as a teacher in the school system down in Atlanta, I said, "Hey, I need a summer job. What can I do?" And I took this job at CBRE, helping them with their marketing packages. Actually, is what I started doing for Malcolm McComb and his team at CBRE. And that just, I loved it. And it blossomed into, a real career in commercial real estate. They were, a multifamily investment sales team. Um, and so I was there for, 7 or 8 years, working with them. And I really just, I found a passion, working in real estate, and decided to go back to, business school, get my degree. And then I ended up at TIAA. And I really did that, Joel, because I being a broker is great, but I wasn't satisfied with being in the middle of the transaction. I really wanted more decision making, more control over what was happening with the transaction. And then I also, because I started with the teaching piece because there was kind of a misalignment working in that space with, I questioned, what am I doing, right? Who am I serving? Who am I helping? And I couldn't connect the dots until I actually got this position with TIAA. And I was like, oh, I can actually couple this real estate passion with actually mission based work. And so it all just really fell into place and made sense for me.
Wow, wow, okay, all right, that's interesting. One thing reason why we started this podcast, and many of our listeners know this already, but it was really to inspire those who are trying to get into commercial real estate. You know as well as I do the statistics around that, right? There's like 3% minorities in commercial real estate, and but it's a huge opportunity for a lot of growth and a lot of frankly money that could be made, but it's hard to get in. And so to know that you came from a school teacher, eighth grade school teacher, all the way to managing billions of dollars in real estate is like unbelievable, right? But it shows it can be done.
It can be done. It can be done. And our company sort of takes a position of hiring smart people, right? And passionate people, and that's who we've employed in impact investing, and it's working out, and it's working very well. And so that's what we're looking for as we grow our platform.
Okay, all right. Well, you bring up something that I actually wasn't even going to think about, but you mentioned about employing smart people. Do they have internships, or how does that normally work with
We
somebody
do.
wants to get into teachers? Okay.
We do have internships. We actually just started our interns this week. So we have a number of interns that come from Morehouse and Spelman, and other historically Black colleges and universities across the country. So we have a huge internship program of both undergrads and grad students,
Okay.
some of which make it into what we call a rotational program.
Mhm.
And they take 2 years to rotate, typically between two different teams that first year. But it's pretty much guaranteed employment once you come out of that rotational program. So
That's
we've found some really great talent on our team, especially through that internship to rotational program.
gotcha. And what cities do they offer that in?
Well, we have about 14, 15 offices across the country. So, anywhere you want to go, we can
Okay.
we can pretty much find a spot for you. So we have a couple of people on my team now that are in Chicago, some that are coming here in New York. We have a pretty big base out in California in Newport Beach as well.
Okay. Okay. All right. I didn't know because some firms it's just like the corporate office where they'll, just have the interns or whatnot. But from what you're saying, it could be anywhere in the country. So that's good to know. Yeah.
Yeah, I think listen, my plug for Nuveen, it's a great company to work for. I've been here 16 years. It's a global company. You can move around. You can really find what you're good at,
Mhm.
and find the group that you want to work with. And it's just, I think people in our firm really appreciate that about this business, about this
Gotcha.
firm specifically. Yeah.
Gotcha. Gotcha. And you mentioned, and I don't remember whether this was before we went live or didn't go live, but you mentioned about Nuveen's relationship to TIAA. Are they a subsidiary or was it spun off?
So
Yeah,
yeah,
he'd have been around a while, if I remember correct.
they
Yeah.
they both firms have been around for a really long time. TIAA acquired Nuveen.
Okay.
And so TIA is the parent for Nuveen. Nuveen is the asset management arm for TIA. So we manage basically all of TIA's assets.
Okay. Gotcha. Gotcha. All right, sounds good. Now, you mentioned just a couple of things that are related to what you're doing now. There is direct investing and then non-direct investing. So, on a non-direct perspective, how does that actually work? Are you an advisor to like the pension funds, or how does that kind of come together?
Yeah, so we raise third party capital to invest in our strategies. As so yeah, so they're just a typical investor, Joel, on whether it's impact housing, affordable housing. We have market rate housing strategies as well. We cover industrial, retail. So whatever portion of real estate you want to invest in, we have an offering for that. We do some or have done some indirect investing along the way, which is really helping Joel some smaller managers or kind of startup managers, helping them launch their products.
Okay, gotcha. So, is that more of like a fund to funds model, or how's that structured?
No, it's we will sit as an investor, right, for them. And a lot of times it's great because it lends credibility because we do a lot of due diligence. It lends credibility to, especially some of the emerging or diverse managers, that we want to support along the way. So that's how we use that capital, and we think about it in an impact investing kind of way.
Gotcha, gotcha. Okay, well that's quite interesting. So, what is that? Just a little bit more detail on that, if you don't mind. If we're like, what's the average check size? Is it development? Is it acquisition? Is it certain markets? How does that all break down?
Yeah, so some of our earlier investments that we made with managers were anywhere between 25 million to 50 million in a fund.
Mhm.
We also have an impact credit business that we are starting up now, where we're looking at more individual deals and individual sponsors. So, minority developers or minority sponsors or smaller managers who may need some balance sheet support. And so those investments may be, smaller. They could be as small as $10 million upwards to something larger, where we may participate not only in balance sheet support, but also participate in a transaction.
Okay, all right, gotcha, gotcha. And you said that that's actually direct investment as opposed to going through a third party from
Right.
that point. Yeah.
Yeah.
Because I mean, Pam, just to be honest, and you probably notice as well as I do, if you're dealing with the pension funds, a lot of times once that money gets into that filter of that middleman, if you will, it's very dry coming out on the other side in a lot of cases. Right? I mean, it's like, where's the money, right?
Yeah.
But
Yeah.
the pension fund will say, yeah, we've allocated, $300 million to emerging managers or whatever. And then you'll see, 200,000 coming out the filter on the backside. So it's like,
Yeah, no, and we don't I do appreciate, Joel. That's a good point, and I do appreciate, like, we don't make those wild statements, right? That we're allocating 300 million to somebody, right? We have executed on that, and we've done it, right? And
Mhm.
so it's like, we're going to give you 50 million, we give you 50 million, right? We're going to give you, and so it's not I wouldn't say it doesn't come out the other end in that kind of filtered way that you just described. Like, we are really committing, right, to these partnerships, to these relationships. And we're not looking for a one and done. And I think that, a lot of the partners that we've worked with across the country will tell you that, we haven't just done one deal with them, right? We've done 8 or 9 or 10. We really made a significant investment. And that's really because it's hard for us to do due diligence, right? We have to
Mhm.
do a lot of diligence to make an investment, and once we do and spend that money, we wanna make sure that that's a long-term partnership.
Right, right. Yeah, and I will say that, without mentioning names, you have walked the walk in that regard, because I know some specific examples where you have done that and certainly helped some companies grow. So, kudos to you and Nuveen for, not just talking the talk, but actually walking the walk. So I do appreciate that. One of the things that we always talk about on the show is, there was a lot of money that was earmarked after the George Floyd situation, and I like to get everybody's opinion of, is that money actually hitting the street? Or is it, I think I heard the other day there was something like 30 billion that was allocated, or something. There was some huge number, and like only 30 million actually went out, or something like that. It was just crazy. So,
Mhm.
have you seen any of those allocations actually make it out on the street from all these institutions that claim to be putting money out? And if
I
you don't
think
know, don't worry about it. I'm just,
yeah, I
her
mean
throwing questions at you.
I appreciate the question, and you know what? I think that there have been some efforts. I don't know the number, Joel. I wish, somebody should do that study, right, and see what
Yeah.
that number looks like. I don't think it's as great as what was promised for sure. But I think what I was happy to see was there were a number of firms who stepped up and created programs like I'm talking about, right? This impact credit type program where it's like where do we really help and invest vertically, right, up and
Mhm.
down the chain to help minority vendors, minority sponsors, minority developers really get sort of that lift or leg up, and get started in a real way. And I think I've certainly seen a number of those programs. I don't think they've been fully allocated to your earlier,
Mhm.
point about like throwing out these wild, like we're going to allocate X amount of million or billion to
Mhm.
that initiative. It's clearly not been completely allocated, but there has been some good movement.
Okay. All right. Well, sounds good. Sounds good. So,
Not enough. Not every enough
yeah,
though. Not
yeah,
certainly.
yeah. Certainly not. Certainly not.
Yeah.
And then, sometimes the hurdles are so high. It's like, how is that going to really benefit anybody if they can't get there, right?
Yeah.
So
Yeah.
that's the other issue. Um, you mentioned about affordable housing, impact investing, et cetera, et cetera. How does Nuveen define impact investing? Just to be clear for our audience.
Yeah, and I'll say what we've done in impact investing so far, and I'll set aside impact credit and what we're doing there for a
Mhm.
second, is focused on affordable housing and what I would call deeply affordable housing. And it really comes down to what people are earning.
Mhm.
And we look at residents who are earning 60% of AMI or
Okay.
area median income across the
Mhm.
country. And
Mhm.
and that's where our focus is. And when you focus there, you fall into kind of, very defined categories of capital A affordable housing, such as Section 8, tax credit deals, as well as I really like what we're doing on the impact side in converting market rate deals to affordable by
Okay.
adding restrictions. And so we are preservationists. We want to preserve these assets long term. We think about how we exit these assets and making sure that if we do have a liquidity event where we need to exit, that we are exiting it into the hands of another affordable housing investor. Or in some way, we've restricted that affordability long term so that, it will be
Yeah. Long term.
preserved in
Great.
yeah,
Yeah.
in perpetuity, right? And
Mhm.
so
Mhm.
so, our biggest strategy is not to displace tenants.
Right. Okay. Well, yeah, that makes perfectly good sense from that standpoint. Now you mentioned 60% AMI. I'm sure you could run into a lot of situations, especially in the urban core, where deals don't pencil at 60% AMI. So is there a certain percentage that you require, like a floor of 60% AMI rents, or how does that actually work?
Yeah, I mean, we follow the, housing agencies or HUD
Mhm.
guidelines to figure out what that 60% is. And you're right, right? All the deals don't work at 60%. Sometimes we have some deals where we look at potentially going up to 80% in certain areas, right? Because there is an affordability need for that demographic as well, between 60% and 80%. But here at Nuveen, we're all sector specialists. We focus on, we become very specialized in areas that we invest in. We think that's better, right? It's not just a hobby for us. Like,
Right.
we want to be experts in the industry. And so for me, I focus on impact investing. I focus on affordable housing. We have other groups in our organization who focus on like workforce housing and value add strategies and market rate housing. And so they can address, those assets within their portfolios. But for this one, that is how we define affordable housing. And, you know, we can get into it later, but one of the things that I like to, just express about our strategy is, although it is a real estate strategy and, we're making decent returns, solid returns through investing in affordable housing, for us, the real estate is secondary, right? It's the residents that are really important. And that's our real focus. Is, how do we improving the quality of the unit? That's just our core competency. We've been doing real estate forever, right? We have $155 billion portfolio of real estate. So we do that,
Well,
right? We do that like looking at the back of our hand, right? So so we know real estate, but it's really that resident and focusing on that resident's need and trying to improve quality of life through the social impact piece where we focus. And that's where the topper of, right? That's what makes us an impact investor. It's the intentionality of investing in that that real asset in order to improve every single tenant's or resident's quality of life, right? And we really, like, the ultimate goal is some pathway to ownership, some pathway to equity, right? If we could turn over every single property and move residents along that path, like, that would be successful for us.
right, right. That's interesting. We had a guest on our show a few weeks ago. He's an asset manager based out of Atlanta here that is doing some phenomenal things. And they're actually working on a model that will allow for $10 a month people to get the financial advice that they need in order to get to that path of home ownership. And I think that's an excellent idea. It might be worth making that connection. We could talk about that offline, but that's the whole idea. Don't
Yeah.
stick people in a situation where, they're in public housing their whole life. I mean, coming out of New York, you've seen that as well as I have, where you have people 30, 40,
Cycle.
50 years, right, in public housing, and then their kids are in public housing, right? And in some cases they don't even want to give up those apartments because the rents have some controls on them and everything else. So it just becomes cyclical, as you mentioned. So very, very good point in that regard. Do you define a project as affordable if it's at a minimum of 20%, 60% AMI, or is there any range with that? It doesn't have to be 100% at 60% AMI, 100% of the units, right?
No, so the tax credit program, which I'm sure you're familiar with, right, has
Gotcha.
kind of, yeah, it's done a really good job. It was developed in 1986. It pulled together this public-private partnership, and I think that's been great. It's developed, about 3.5 million units, in the U.S. since 1986, which is not enough, right? We need we have a 7 million unit deficit today, right? So we need a significant number of units to address the housing crisis.
Mhm.
But the tax credit program has really focused on 50 and 60% of AMI, right? At 100% affordability. And I think it's fine, but I think as we need to address the supply in the market, we need to think about more mixed income strategies.
Right, right.
We should not be creating communities of 100%, what we're calling that 100% affordable resident at
Right.
60% of AMI. That's not creating good economy, right?
Right.
So we need to think about mixed income. Now, I will say I'm not necessarily happy with the way that the zoning plays out across the US, and that we're like looking at 20% of affordability at that level.
Hmm.
In new developments, I think it needs to be more. I think it needs to be upwards of 30 to 40%
Hmm.
when we're looking at development, at that 60% of AMI level. And then you can fill in the rest with like, middle income, that
Right.
8% AMI or even market rate,
Hmm.
residents. That is a better, right? That's a better format. And then introduce really wraparound services. So we shouldn't just be building affordable housing or
Hmm.
housing in general.
Yeah.
We should actually be thinking about community and adding on that healthcare component and adding on that educational component and
Hmm.
adding on those retail amenities that people need in a community to thrive. So that was my soapbox moment, Joel, but
It's
but
all good.
I truly, I mean, I truly believe that's the future, and we need to be innovative in how we're thinking about the development of housing in this country going forward.
Yeah, well, that's exactly why I asked the question, because what happens is if you're doing 100% at 60% AMI, a lot of times it tends to gravitate back toward being what they just came out of,
Yeah.
right? So unless you put that mixed income in there and kind of give that inspiration to, step up to a higher level and maintain your property and do these other things, it just, you don't want to be building a new ghetto, basically.
Yeah, yeah. No, most people are aspirational. They're
Right.
not waking up every day going, I want to live in this affordable
Yeah.
housing unit for the next 20 years, right?
Yeah.
People are
Yeah.
aspirational and they should be able to matriculate through housing. And
Right.
and some of the things that we're doing in our portfolio that I think is just really fantastic work is, we're figuring out how to skill up, some of the adults, right? How do
Mhm.
you build skills to help them earn, better income, to get better jobs? How do we help people get, a GED? How do we help them get a degree? How do we tutor, our children in the property and expose them to things, such as real estate, right? It's
Mhm.
not just about being a realtor. Like there's a whole different world out
Sure.
there called commercial real estate to
Mhm.
expose kids to. And so it's really like implementing that social impact that, will hopefully help people matriculate through housing. Right.
Right.
And not be stuck in a unit for 20 years and have their children live in that unit for the next
Mhm.
20 years, which has been the cycle.
Yeah, yeah, unfortunately it has been. Morning for Joe CRE podcast is sponsored by ImpactMask.com. That's M as in Mary, ImpactMask.com. The world's most breathable mask that has 99% efficacy, which is higher than an N95 mask, and it won't fog your glasses. But I appreciate you saying that, because that's really, the issue. As I mentioned, growing up in the city, I've seen that firsthand where people are just generationally in public housing. And that's a perfect segue to a deal that you just did. I understand is one of the biggest in the country so far this year. And yes, that deserves a big smile because it was a pretty impressive deal. So walk us through it if you don't mind. What was that all about? You did a fantastic impact investing deal recently.
Thanks, Joel. Other than not having a life for the last few months. um, Look, it's always been the vision of our firm, and I think, to invest in affordable housing, to manage affordable housing, you also need to have, you need to have an operational platform,
Mhm.
to really do a great job. We have, in a lot of ways relied on third parties to do a lot of that work for us. And it's been challenging in some cases because of the way that we think, Joel, as an impact investor
Mhm.
and how we want to implement social impact throughout our portfolio. That's a story that a lot of people aren't, accustomed to hearing or, executing on because for a long time, affordable housing was owned by a lot of private owners, right? And it was just looked at as a real estate investment, passively managed. You met your compliance, you met your audit, but you didn't really
Yeah,
think
you
about
didn't. Yeah.
who was living, right?
Right.
Who was
Right.
living in those projects?
All
How do I
dollars and cents. Yep.
dollars and cents? And it's a great investment. It's durable and stable, and every investor should have affordable housing in their portfolio, because it makes sense.
Yep.
But to really do it well, I felt like we needed to be vertically integrated, and our company was really behind that because TIA wants to do more of it. They really like this strategy. And so to do that well, we looked at this large portfolio that was owned by a credible New York operator here, and it was a great portfolio. They had done a great job managing it. They were aligned with us in thinking about residents and that social mission. And the people there were just fantastic. And our stories made so much sense together. So we acquired that portfolio, which came with about 550 people in property management and development, construction management. There's also a safety and security business that we now own. And so that is going to really just make us, right, operate more efficiently. We're going to be better operators. We're going to be better implementers of our program. We can really roll out our intentional social impact program with our residents, do all of the environmental stuff that we already do within the portfolio, with, the backing of all of that, all of those people and all of that expertise. So it was really exciting. It basically doubled the size of our portfolio, in AUM. And it's really going to kickstart what we're doing on what I just mentioned to you, that community development piece and being able to go out and talk to and we have a wonderful government relations department here at Nuveen. So we've been meeting with mayors, city council people, all across the US and talking about this community development. And they have been very receptive to it. And now we have, the manpower, the woman power to get it done. And that's what's really exciting is we will really be able to grow our platform, preserve housing across the country, and add new supply.
Okay, all right. So the deal that you did in New York, you actually plan on replicating around the country and other markets, from what you're saying.
Well, we plan to certainly acquire more assets, manage more assets and develop deals. And we'll work with, local partners in all of these different jurisdictions across the country to execute on that. So that, it kind of rolls back around to what we're talking about with Impact Credit, Joel, and
Mhm.
bringing in those local developers who care about their communities, right? Who
Right.
cares more about their communities than the person living there.
Yeah.
Joel, you would come here to New York, back to Harlem, right? And because it's personal for you and it
Yeah.
means something for you to make sure that the residents are taken care of and that they have good housing options. And so it's personal.
Yeah.
Yeah. So we want to roll that out. We want to roll that plan out across the country.
Yeah. Well, it is one of my dreams. One of these days, I'll get to do some big stuff up there, but that's certainly on the radar. So
Yeah.
I
Yeah.
appreciate you bringing that up. So this particular deal was because it's public information. I don't have it here in front of me, but what was the dollar amount? How many units? What city? I mean, I know the city, but what city? And all that kind of stuff.
We had approximately 20,000 units in the books. This gave us another 12,000 units of existing assets. There are 8,000 units in the pipeline. So it really significantly increases the size of our portfolio. The properties were located in 7 states, so majority being in New York, of course. So high dollar volume. We didn't release the pricing, Joel, but
Oh, okay.
but I can tell you, it was a pretty huge portfolio of assets, and just that company had done such a great job of developing, rehabbing, maintaining that portfolio. So we feel really good about what we acquired and what we'll do, to implement social impact across that portfolio, like we're doing across our other parts of the portfolio.
Sure, sure. Well, 12,000 units is nothing to sneeze at. So
Yeah.
that's that's a big chunk. So certainly appreciate that. Let's see here. Miss Redwine, you had a question here that you wanted to ask. What skills experience is of greatest interest to companies hiring interns? Okay, so that's a first question. You got any thoughts on that? Pam?
Yeah, I mean, for us, the interns we're hiring sometimes don't even have a real estate background. They're looking at other types of industry, marketing. Some have no experience. Especially some of the undergrads. Like this is their first job. But I do go back to like we're just looking for really smart people. And diversity is definitely a key part of what we look for here at TIAA. We have, this has been the only company, Joel, I think TIAA that had this succession of one Black CEO to another Black CEO. Um, and we also have, the CEO for Nuveen is also a person of color. And so diversity means a lot for this company. So hiring smart people, being inclusive, it doesn't even matter if you don't have a real estate background. I mean, we provide a ton of training here too. There's a lot of opportunity to take courses, and our company's super supportive of that.
Okay. No, that's really good to know. I didn't realize at the time these other two questions are kind of related. Are these full-time positions or part-time remote positions? Where should one look for these opportunities? So what would you answer to that?
Full-time positions, they are not remote, and they are all over the country. Yeah.
Okay. All right.
We're global too. So I didn't even talk about the global piece because my program focuses on the US specifically, but we have a number of offices in APAC, in the UK, in Germany. So it's, we have global coverage.
Gotcha. Gotcha. All right. Appreciate that. Looks like we're getting a bunch of intern questions here.
We just hired all of our interns, but next year,
Yeah, yeah. This is a 2024 discussion.
this is a 2024
Yeah,
discussion
yeah.
for sure.
Let's see. All right.
And I'm not HR, so I apologize.
Right.
I can't answer all of your questions.
Yeah, yeah. All right. So, all right. So, former elementary school teacher as well. When they're breaking the real estate. So, is there information on this on the website just to kind of lump all those questions into one, Pam, or is there like some
On
other
the in
website to go to or whatever?
on the internship, there it is on our website, I believe, and I think there's a whole section dedicated to internships, because we have a special HR team that focuses on colleges and universities.
Okay. All right.
Mhm.
And do you go down as far as high school or is it all college
It's
bound?
all college,
Okay.
and I think that you have to be, and again, like I'm not HR. I think you have to be at least a junior
Okay. In college.
in college.
Okay. All right. Sounds good. So,
Mhm.
um, if I'm pronouncing your name right, Shauna, if I'm saying that right. Yeah, I would say go to the website. Pam is not HR, so we'll defer those questions, but I'm sure you could get your information there as to what you need to know. So, all right, so we appreciate that. But thank you for participating and asking the questions that you have here. So that's fantastic. Um, so Pam, looking forward, obviously you're building the platform, you're the director there, you're getting a lot of stuff done. Where would you like to see this platform go? As what track are you on going forward, and where do you want to be, let's say, in the next 5 years, in the direction of this platform?
Yeah, so I just mentioned that our platform is US based today. I do think we need to expand globally, and we're taking a look at some of those opportunities now. Affordable housing is not just a crisis that the US is having, it's a global crisis. And it means different things in different locales. It's a very local investment strategy. And so we are looking at how do we invest in Africa? How do we invest in Asia? How do we invest in the UK? And what does that mean for the different types of programs, right? That they have. And U.S. housing and the way our U.S. housing works is very different from the way it works in other continents. But it is something that needs to be addressed. It's a growing issue because rent inflation and wage stagnation is the formula for a housing crisis
Right.
and so that's what's happened here. It's happened elsewhere. So that's one point, is to move this into more of a global investment strategy.
Mm.
And then the second point is to really focus on rethinking, reimagining housing and the communities that we're developing, right? And understanding and using the tools that we have, um, using the tax credit tool if that works, but also just thinking about how should we live, right? How should we be living? Like housing is essential. It's at the basis of almost every type of investment that we make. And so we really do have to think about incorporating the needs of residents and what will help those communities really thrive.
Gotcha, gotcha. So that's good. Are there any markets that you would not go into because they're too small, or because I'm assuming you're mainly focused on, urban markets of the larger cities where there are housing crises?
We're not really because I mean we have a lot of assets of course in some of the major primary markets. We also invest in secondary markets. We invest in tertiary markets. Some of the rural, affordable housing needs more investment because it's been developed so far away from city centers, right? And it's needed. Like you can throw a dart anywhere in the US and hit the tiniest or smallest city or the most rural city, there is a wait list. I guarantee you there is a wait list to try to get a unit in that particular property. Um, and that is the nature of the housing crisis across the US. So we invest where it makes sense. We do as an institution, we need liquidity. And so, I won't or I can't go into markets where we can't, exit a transaction or have some liquidity where maybe that asset is resyndicated or put back into the tax credit program. And so we look at those, kinds of things to sort of measure where we should make those investments. But no, we're in very small markets. We're in Mississippi, all the way to New York, to
Mm,
Newport Beach, Irvine, California, right? So we have
yeah.
we have assets everywhere.
All right. Yeah, I could see Irvine needing some affordable housing for sure.
They do, right?
Yeah, big time. And
They
so,
do. They do.
yeah, absolutely.
And a
Um,
growing
yeah.
trend, Joel, a growing trend is right. We have an aging population, and our senior population will need more housing in the future, as wages are not growing.
Yeah.
Inflation's going up, and so there's a great need there as well.
That's interesting. I actually had that brought to my attention the other day. There's an acquisition deal that I'm working on, and we were talking to the public housing, sector, the housing choice voucher program, and they were saying that there was actually a glut of people looking for one bedroom apartments
Hmm.
that are aging seniors,
Hmm.
because they're just not available. And I was not aware of that, not really being in that market. So I thought that was quite interesting. And that's kind of to your point that we tend to think of the young ones before they buy a home as being the ones that need that affordable housing, but it's not just them, it's the aging senior population as well. You know, we live off Social
Absolutely.
Security. Yeah.
Yeah, they're on a fixed income, and
Yeah.
and it's not growing,
Hmm.
right?
Hmm.
So they need the voucher, they need the Section 8 voucher, they need that project-based Section 8 housing. And Joel, we own a number of senior or age restricted properties, and those one bedroom units are really important. Um, and look, this is just a fact, nothing against you, Joel, but women outlive men. And so sometimes when spouses expire, it's just the one, remaining spouse in the unit. And so, it's really important to also think about that aspect of housing and where our population is trending.
Yeah, yeah. No, that's just a fact. There's nothing abnormal about that, or not abnormal, but inaccurate about it from that standpoint. Let me ask you one other thing, just real quick, and you may have an answer on this, maybe not. How has the Fed's moves impacted your strategy? And are you thinking they're going to pause now, or inflation sits today at roughly 4%? What's your thoughts on all that? Because obviously, all of us have been impacted by what the Fed's done over these last few months.
It has been interesting to watch. I've been in the business for over 25 years, so I've seen the different cycles. And, these rates are still some of the lowest rates that we've seen over
Over
the
time.
cycles. Look, there has to be some adjustment made from seller expectations, right? And it's taking some time to work that through the system. And that, yes, rates have moved. That means prices have to move too, right? What you're selling your asset for, what you're buying your asset for, that all has to make sense. And the debt has to be accretive, to whatever asset that you're underwriting and buying. So yes, it has impacted, but also affordable housing, which is why I say it's such a great investment for investors, is it has a very durable stability and stabilized income, and that there's that inflationary hedging instrument, right? And that you're getting markup to markets in rents through the housing agency that don't really impact, especially on a project based Section 8 or
Right.
someone with a Section 8 voucher. It doesn't impact their payment of rent because they're only paying 30% of their rent towards, 30% of their income towards rent. And so it doesn't really impact them, but you're getting a markup to market sometimes in a down cycle.
Yeah.
And then there are other adjustments that are made along the way that are nice inflationary hedges to affordable housing. But also spreads are tighter, right? If you're using Fannie and Freddie for financing, you'll find that spreads are tighter on affordable housing than they are in market rate housing. So the debt can still be attractive and accretive to assets that we're acquiring in the market. I haven't seen a time in the last several cycles, even in the down cycles, where people have stopped buying and selling affordable housing. It's still a very liquid asset, and that's why people invest in it. I think the hardest part is it's not a passive real estate investment. It's
Yeah.
it's high touch. It requires a lot of management. There's a lot of compliance and audit around it, and that may stump, or hold back some investors from coming in.
Mhm.
But yeah, it's always. I've never seen it slow down or that cycle stop of acquiring and selling affordable housing in any market cycle.
Yeah, yeah. Well, you bring up a good point. We can almost draw a parallel with the COVID crisis and hotels. A lot of the five-star hotels were really hit upside the head, but
Hmm.
the limited service type, simple hotels, those tend to trend better. And I can see where very high-end luxury apartments could really get beat up with these market cycles as opposed to affordable. Because, like you said, if the government is marking the market, the rents and those vouchers, then you're not going to see any impact from that standpoint. So that's a smart thing, and that's probably why I guess Nuveen loves that sector because it does make sense and it kind of gives them a hedge against other things going on in the marketplace. So it makes perfectly good sense.
Yeah, I mean, for TIAA, who's our largest client, they're managing the plans, 401k plans, and annuities for many of their clients. And a lot of them are colleges and universities. And so they need to be able to provide some sort of, stable return. And this is just a great investment strategy to do that. And it just aligns with their mission as well.
Yeah, yeah, no, fantastic, fantastic. So, lastly, I know we talked about this a little bit earlier because you covered a lot of ground as regards direct investing, indirect investing. Um, is Nuveen doing just equity? Are they doing debt also, or I don't know if that's all under your group?
No, it's mainly equity.
Okay.
We do a partner with some CDFIs on the debt side,
Okay.
and we also are a part owner of Impact Community Capital, which is a firm out in San Francisco that lends
Mhm.
in the affordable housing market. So we do that more lending through the third party, through
Okay.
some third parties than we do on a direct basis. But our program is mainly equity, and that's mainly where we'll grow the
Gotcha,
platform.
gotcha. And is that co-GP or just LP?
So we are anything. We're GP.
Okay.
We can take on all of those roles. We are, GP, mainly GP. We can be co-GP, and in some cases LP.
Okay, all right,
Yeah.
sounds good. And I think you said your minimum check size is 10 million.
It is. His minimum is 10 million. I mean, that's a that it, and if we went and I've heard this from other people, right? Other institutions have much higher bars set than $10 million, but it really requires a ton of due diligence on our part, and so anything below that just doesn't make sense.
Yeah. No, I mean, I agree. I think it's, for an institution, institutional capital to have a floor of 10 is actually, I don't know if this is the right word for it, generous, but it's certainly reasonable to say the least because of all the due diligence. I would have thought that that bar would have been 20, 30 million as opposed to 10. So, to your point, that's pretty good from that standpoint. So, this has been a great discussion. A lot of good information. We covered a lot of ground, and you know what? I'll give you the floor for the last minute. What would you want us to know? What would you want our listeners to know? And uh, what do you want us to take away from this call?
I think listen, this impact investing space is growing. It's growing significantly. I think it is becoming a part of any institutional firm. I mean, you can't not have it, right?
Right.
Everybody needs to focus on some form of responsible investing.
Mhm.
And so, we've been focused on it in a big way. We will continue to focus on it in a big way. We're excited about what we're doing in the space. I think we do it a little bit differently and how intentional we are about focusing on our residents, and also doing well at real estate and doing good and doing well right at the same time. And so, I'm just excited, Joel, to be here on your podcast and appreciate what you're doing. Again, I think you're doing great work in this space. Um, and I've looked at your roster of speakers, and it's wonderful and it's well rounded. And I'm happy to see the exposure that you're providing to different types of real estate and what people are doing in the commercial real estate space in general.
Yeah, yeah, no, I appreciate that. One thing I used to always talk about is how most people don't realize that 125th Street in Manhattan is obviously Harlem, where the Apollo Theater is, right? One stop on the D train or the A train puts you at Billionaires Row, 59th
Yes,
Street. I mean, think about it, right?
yes, yes,
Columbus Circle, right?
yes, yes,
One
yes.
stop, and yet and still, it is like worlds apart. When you think of what people can see, you have grand houses and all the public housing up on 125th Street. And then you have all the, $1 billion skyscrapers down on 59th Street. So
Right.
it's just incredible. And to be able to expose people, because I know growing up as a kid, it was like, well, the only way out is either sports or hip hop. Or actually, nobody was making hip hop back in those days. So I take that back.
Yeah, yeah.
But it was either that or it was drugs.
Mhm,
You either got to sell drugs or you got to get into sports.
yeah.
But not realizing and being exposed to what the possibilities are, because oftentimes people don't see other people that they can relate to doing these things.
Right.
And so that's why, I love what we're doing here, because it's exposing people to help them to see, hey, it's not just sports or drugs. You can actually have a great career in commercial real estate if you follow the path of other people that have gone before you, but you just got to know what those paths are and be exposed to it. So,
Absolutely.
yeah.
Great
Well,
work, Joel.
yeah, thank you, thank you, thank you. You know as well as I do, a lot of us didn't even know that there were so many minorities doing so much in commercial real estate. So it was good that we were kind of able to get together and kind of expose this. So, but I appreciate it. And Pam, I really want to thank you for spearheading all the stuff you're doing at Nuveen, with the balance sheet program, the GP, the LP, just all the ways that you're getting in to help do impact investing, help with affordable housing, and help other developers and other investors that are smaller that are trying to grow. So that's really impressive, because you can't always get an institution to back you, and you're certainly reaching down to give a helping hand. So, certainly appreciate that. So this has been fantastic. This has been a great show today. So I certainly appreciate it.
Thank
Um,
you, Joel.
Absolutely. So we don't have any other questions here, so we'll wrap up. And you all, we want to thank you for being with us today. This has been the Mornings with Joel CRE podcast. We want to give a special thanks to our guest, Pam West of Nuveen, who has certainly shared some very valuable insights on what they're doing to impact affordable housing amongst the communities here in America. And Pam, we certainly want to thank you for spending your time this afternoon with us. We certainly appreciate it.
You're welcome. Thank you, Joel.
All right. Have a great day.